Hello and welcome to the TenKei ATM YouTube channel. This title of this video is called Do Not Do This When Trading. Okay, now it's kind of like a warning, isn't it? If you look over here, this is our demo account which has been provided for you who have the course, or for you who are just watching, for you who wish to be entertained, because hopefully we are entertaining you in some way, especially when I stutter and get the words wrong and you feel like, come on Wilson, that's my name, my name's Wilson, get those words out. Anyway, this is talking about the TenKei TPT, the TenKei ATM. This is the combined version where we have the TPT, the manager. This here manages these trades over here. But look, let's just jump straight into this. Down here today, we had this running, we didn't even switch it on, but look, we had some losses. So we got to talk about the losses as well as the gains, okay? So generally, when this one's set to scalp, small amounts over here. But what happened here today was, let's now watch this. I'm going to click here on this chart, click here, drag this over to the point where it did not work here. Okay, now what time is this? Let's check this time out, because imagine this could be you doing this as well. This is 8:58. Okay, and over here, click, so it allows us to drag over. This is also 8:58. Click over here, click there, drag it over to 8:58. So at 8:58, the markets were going down. Now, at the moment, we have switched this off because over here, look, we made 47 points because we made some changes. But, we set the stop loss for 100, 47 points. That's nearly 50% of. It's like a 2-to-1 ratio in reverse, if you know what that means. Okay, so, but here, 8:58, it was a trade which says, yes, the markets are going up. But of course, not of course, but it did go down. So it failed on this trade on this EA, which is the same EA, remember, as this one and this one over here, but the settings has been set up differently, right? So here, on this chart here, it shows that the Germany, or the DAX, is only trading unto itself. There's nothing else telling it to, there's no other indicator. And what I mean by that is the indicator over here, for this one here, is the FTSE. So it's the FTSE and DAX are working in unison. Over here we have the FTSE, DAX and Dow working in unison. So over here, this is working as a solo, like a singleton. It said it was in an uptrend. So you can see right now it's saying uptrend, uptrend, uptrend. So really, if we had this on at the moment, this switched on, it may place a trade depending on the parameters it hits, as in it rising, going up, pull back, and then continuing. So it's what we call a continuation trade. But here today, we had this trade here which failed, but this one also failed, this one also failed. So we had 3 trades all doing exactly the same thing. So the danger is that when they do fail, if this one fails, if you have this one set up similar to this, running on the same chart, and you lose on this one and this one and this one, well, it's a triple loss, isn't it? So we end up with something like this over here. Really, we just want one market doing this thing unto itself. This one would be perhaps not the DAX, because these are only examples. This would be maybe the FTSE doing something else, and this would be the Dow doing something else, or this could be the euro dollar doing something else, or it could be the cable dollar doing something else. So what you want is, you don't want 3 markets which are exactly the same. DAX times 3. You don't really want that. You want DAX, FTSE, Dow, as I said, euro dollar, any other market. So do not repeat them, or if you do repeat them, make sure they're doing completely different things up here. So if one loses, you don't want them both to be doing the same thing. You want to be able to get chances, whereas this one may lose, but this one may win, and this one may win, so we end up hitting our target. And remember, the target we normally set is for, let's say, 12.5 points. 12.5 points per day times 4 equals 40, so equals 50, times 5 equals 62.5, and we're aiming for 10 points a day. So if you trade at 12.5 points a day, for example, get those figures in your head, 12.5 points per day, 4 days a week, that's 50 points. So that means you don't need to work on Fridays, and you're getting your average of 10 points per day. So the point is, do not do this. This is just an example. But what happened here and here was good. On these two trades exactly the same. Over here, it did not do it at all. But the good news is over here, it made back the profits. So today on this demo, it's a demo, trading at £10. Oh, this one is £10 a point. It's now made since we opened this account, which was yesterday. How about that? So since yesterday, it's made on this demo account £167.32p. Okay, it's a demo account. But what you want to do is you want to be able to get your demo account to work like it would be working on your live account. You want to take your demo account seriously. So when you do go live, you're just as serious. It's not a willy-nilly thing we do here. Okay, so look what I'm doing. Bring this back to here. So remember, this is, do not do this when trading. Do not have, do not have 3 markets all exactly the same, doing exactly the same thing, because, well, remember, if it wins, great, but if it loses, well, you're losing, multiplied. You're multiplying your losses for doing the same old thing. You don't want that. Okay, don't want to leave it on a down note, a low note. Let's speak up, but I think this is pretty much so up for you to understand and for you to do the right thing. Let's talk about what's good and what's not so good in order to keep on doing the good. Okay, good. Thank you.